makers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, South Korea's President Yoon Suk-yeol has cancelled a visit to Parliament where he faces impeachment proceedings for a failed attempt to impose martial law. Now, there were reports that opposition lawmakers were planning to block Yoon from entering the building. All of this, of course, comes ahead of a parliamentary vote on an impeachment motion against Yoon expected to take place by Saturday. Well, Bloomberg's Sherry Ann reports.
South Koreans are out in force, demanding President Yoon Suk-yeol's resignation. A former star prosecutor that played a key role in convicting former presidents of abuse of power, his government now is on the verge of collapse. South Korea has had a painful and bloody path to democracy, something that these people are trying to remind the public. Now, these crowds can grow really fast. The last president to be impeached, Park Geun-hye, faced demonstrations of a few thousand people in 2016 to crowds of more than 2 million in just a matter of months. That hit consumer confidence, which sank consumer spending. The economy is now much weaker. So authorities right now are trying to calm markets, convince investors that democracy remains healthy and that they remain committed to support the economy. Sherry Ann, Bloomberg, Seoul.
And we'll have more on the political turmoil in South Korea a little later. Now, the French President Emmanuel Macron says he will serve out the remainder of his presidential term as he seeks to put an end to the political turmoil in the country.
C'est pourquoi je nommerai dans les prochains jours un Premier ministre.
This is why I will appoint a new prime minister in the coming days. I will ask them to form a government for the general interest, representing every political force within the spectrum of parties destined to govern, and that they could join or at least agree not to bring it down. The Prime Minister will consult and form a more effective government at your service. Its priority will be the budget.
Meanwhile, far-right leader Marine Le Pen told Bloomberg in an exclusive interview that she believes the outgoing administration's plan to bring the budget gap to 3% of economic output by 2029 is not feasible.
Getting to 3% in 2029, I don't think it's credible. But I'm not the only one. I don't think it's credible either to the president of the Cour des Comptes state auditor. Once again, these are simply promises, and they know very well that they can't keep to them.
Now, for more, let's bring in Bloomberg's Paris bureau chief, Alan Katz. Alan, it's so good to see you. I mean, yesterday we were at the Marine Le Pen interview together. She said that, she would be expecting actually a new prime minister by end of year yesterday. Why is Emmanuel Macron taking longer than expected?
Hi, Francine. So, one, he normally takes longer than expected. It frequently happens in France to say, oh, something's coming today, in hours, or tonight, and it ends up taking quite a bit longer than that. So that's really par for the course for Macron. But I suppose the real reason is that he's meeting today with a variety of political leaders in trying to find this group of parties and politicians who can come together to form a stable government, at least for a short period of time. As you discussed with Marine Le Pen yesterday, there can't be elections in the near term in France, parliamentary elections. They have to wait at least until July of next year. So something has to happen because there is a 7-month period at least when you're stuck in France with the current situation. And so this morning, actually, Olivier Faure, who heads the Socialist Party, said on France Info Radio that he is open to compromises as long as they are mutual compromises. So there is a bit of movement at least. Now, that said, Macron and his party have in the past said that they wanted to reach out to the Socialist Party, and things have never worked out in terms of bringing them into some sort of grand centrist coalition to help govern France. And so I would be quite skeptical about whether or not this would actually achieve anything. But there at least there are discussions going on, if nothing else. And those discussions take time. So that's why it's taking longer. And I wouldn't expect there to be an announcement today.
So, Alan, I mean, it's going to be a big weekend, of course, for Emmanuel Macron because he has to try and find a new government, a new prime minister. But he's also hosting 50 heads of state, Donald Trump, tomorrow at, of course, the reopening of Notre Dame. I mean, is that going to be awkward, or are we expecting news out of that?
So with Donald Trump, you never know. There's no sort of news expected from it. It's the point is supposed to be the grand opening of this great cathedral that's one of the best known churches in the world. And it was, as everyone knows, it was ravaged by a fire 5 years ago. There was a really compressed rebuilding time, and it's supposed to be the sort of the big party for its coming back, for its reopening. And that's really all it's supposed to be about. That said, with Donald Trump, really, you never know. He's coming, I would imagine, in part to sort of show his. He was actually, in all fairness, he was very quick back in 2019 to say what a disaster it was for this fire to have happened. He wants to show his sort of solidarity with Notre Dame. He was early on in his first term relatively friendly with Emmanuel Macron. Things sort of disintegrated a bit later on in their term, but we will see if there is a real meeting between the two of them, and if there is something to come out between them in terms of sort of Franco-American relations and how Macron might work with Trump when Trump comes into office in January.
Alan, thanks so much, as always. It was really good actually doing that interview together. Paris Bureau Chief there, Alan Katz. Now we'll have more of our exclusive interview with Marine Le Pen, the leader of the National Rally, a little bit later on in the show. Now let's dive into market reaction from the political crisis in France. We're now joined by Justine Ali from Bloomberg and Hannah Gooch-Peters, global equity investment analyst at Sanlam Investments. So thank you both for joining us. Hannah, I mean, it's kind of, when you look at bond yields, or actually when you look at the market reaction, they had a brief panic, but actually they're fine with France not having a prime minister right now.
Yeah, so the briefness of the reaction actually really surprised me. But then if you think about the weakness overall in both the French equity market and the European equity market this year, I think a lot of bad news has already been discounted in. I think that the European market and the French market, it's got those large constituents, and this year has really showed the dangers of buying into expensive constituents like L'Oreal or LVMH, for example, when you've got a weakening fundamental backdrop. They've been very, very weak stocks this year.
Justina, I mean, do they also, is there, I guess what's priced in is possible ECB intervention were something to go wrong, or does that come later?
Right. I think what's kind of interesting is sort of, for investors, they might even welcome a bit of, fiscal expansion. And I think that's kind of been a big theme for the area. They're also wondering if Germany is going to do a little bit more to support the economy. But kind of more broadly speaking, I mean, I think what a lot of investors are wondering going into next year is we've had another year of incredible U.S. exceptionalism. I think this is set to be the best kind of year relatively for U.S. stocks since 1997. And so at this point, the U.S. really is not the value play. But do you really see catalysts kind of in Europe to rotate out of that? And it's interesting that most strategists thinking about next year say not yet.
Yeah, Hannah, I mean, I guess the million-dollar question is what's an entry point? I mean, in France, but also Germany, we don't know what happens with the elections in February.
Of course, and I think what's really important is those fundamentals of the underlying businesses, and I think you have to go for companies that have both a valuation discount but also a dependable earnings stream. And I think that just if you have a look at Europe versus the US, you touched on the US consumer, for example, the strength. I just think that you've got more opportunity in the US. Yes, overall the stock market is more expensive on a headline level, but I think that the US consumer is just in a much better place than Europe, and and on a fundamental basis, I just think that's a much better place to go.
We're also, I mean, there's political turmoil in South Korea with many questions. I mean, we didn't really know what happened, even if there was martial law for the first couple of hours that we saw big market swings. Does that play out in the longer term in terms of investor perception on South Korea?
Yeah, I think that's the big question here. And I mean, we're already seeing some more of that volatility coming back with markets kind of speculating that maybe there would be another martial law earlier today. And then we kind of saw the military deny that, and then markets kind of pair those losses. And I think, it's not just about the political instability. I think at the same time, South Korea is also facing the economic threat from, another Donald Trump term, given their heavy reliance on exports in the economy. And we're already seeing a lot of economies worried about a recession there. So I think it's both that and also kind of the political element. And I think it's going to be very difficult to kind of convince foreign investors that this is the market to get into.
Hannah, is there a read across, for what's happening in South Korea, or is it just, I don't know how invested, your clients want to be in South Korea right now.
Well, I think there could actually be a substantial opportunity in a company like Samsung, for example. It's been very, very weak this year, but I think there could be, more than 50% upside potentially in the name. It's trading on exceptionally cheap valuation. It's got a huge cash balance. And of course, it is the leader in the memory market. So, if they can bring their products to market and they can, the sort of overhang, if you like, from all this turbulence and everything goes away, then there could be, real value in a company like that, especially versus what's a more expensive developed market on a headline level. This could actually really be an opportunity for investors while the news flow is bad.
Okay, thank you both. Bloomberg's Justina Lee and Hannah Gooch-Peters from Sanlam Investments both stay with us. Now, Lululemon has lifted its full-year outlook on strong sales overseas. The company now sees between $10.45 billion and $10.49 billion. I mean, it's pretty close in revenue for the current fiscal year. You can see pre-market gaining some 9.5%. Maybe it's because I started doing yoga. I'm just kidding. But it is, as people are getting fitter across the world, I guess that helps with sales of Lululemon. Much more to come, and this is Bloomberg. Welcome back, everyone. Still with us, Bloomberg's Justina Lee and Hannah Gooch-Peters from Sanlam Investments. What a week. So we've survived and we're Friday. But then actually there's a lot of U.S., the U.S. jobs report today is very interesting. It could probably change the dynamics of what the Fed does. Justina.
Yeah, I mean, economists are currently expecting 220,000 new jobs, which would be quite a big rebound from last month. But what's interesting is, last month there were the hurricanes and there were the strikes, and so we got an unusually low number. And so it was kind of hard to read whether that was just a reflection of those idiosyncratic events or it actually was already showing some underlying slowing in the job market. And so today we're going to get kind of, last month's numbers, but also revisions from the month before, and hopefully we'll see kind of that trend a bit more clearly and, weeks ahead of the Fed decision.
Yeah, Hannah, I mean, not my concern, but actually my question is that once Trump comes into power and there are tariffs and there could be immigrant deportations, it changes the dynamic of the U.S. economy. So how difficult is it for Jay Powell now to set policy in December?
I think that, so obviously he's looking to keep inflation steady, and he'll be looking very keenly at the jobs numbers. But I think just from an investment perspective, the news about Trump, we've seen anything geared towards small businesses, pro-business, is moved substantially. Companies like Intuit, say, for example, small business accounting software, Paychecks, payroll software for small businesses, all reflected a lot of optimism already. Yeah. I think that what we've got to do is focus on the strength in the U.S. consumer. So U.S. consumer stocks, again, performing very, very well. And I think that trend is set to continue, regardless of actually what the Fed decision is in December.
So focus on a lot of the retailers. I mean, big tech, we're quite unclear about how they'll handle that.
So I think big tech is almost a law unto its own at the minute. These companies have exceptional balance sheets. A company like Nvidia, for example, doesn't care whether or not we've got a higher risk-free rate. It doesn't care whether the cost of debt goes up. So, I think there's almost like a flight to safety into those names. Of course, the momentum trade is really, really gathering momentum, let's just say. I think there are actually a lot of opportunities outside of those big tech names. And if we continue to look at names like, not so much retailers, but more like, say, for example, Hilton, consumer stocks, even if we look at automatic data processing, of course, with the payroll numbers, but these are all companies that really do, they look at enrollment numbers, they look at the numbers of new employees that are coming in, and they, of course, get paid on that because they're offering that payroll accounting software for those businesses. So I think that if we look at companies with dependable earnings streams, I think that that's a better place to be than, for example, just trying to guess which way this sort of decision is going to go and potentially going to areas of overvaluation.
I mean, and crypto was at 100,000, but again, it's quite unclear actually what kind of policy we'll get, apart from, gold up, crypto up, and for the moment, stocks are holding high.
Yeah, I think, crypto partly reflects just the return of animal spirits all across markets. But also, I think it's probably safe to bet that, the new administration will be kind of a lot more supportive of the industry, especially if you contrast it with, the hostility from Gary Gensler. I mean, overnight we got the news that, Trump has appointed David Sachs, the podcaster and venture capitalist, as the czar of kind of, AI and crypto. And I think, it's probably pretty safe to bet that he will be more supportive of crypto. But at the end of the day, it's all about speculative sentiment and whether the Trump administration is going to keep that up.
Hannah, what are you watching for in the next couple of weeks? I mean, animal spirits in the U.S. Is there anything else that could change your view on certain stocks that you're looking at?
I think, Francine, I'm welcoming any sort of volatility in the market. I think the important thing right now is to try and use opportunities. So far this year, when you had that narrowness in the market, there are opportunities to buy into companies at more reasonable value. China, I think, is really interesting. Of course, we've seen news on about stimulus in China again today. I think there's still very good upside in names that are very high quality, that are focused on sort of China, like Yum China, for example, like Tencent, perhaps. So I think that, one just has to be nimble. If you've got the ability to buy into quality names with durable, predictable earning streams at a reasonable valuation, I think that's where you have to put your focus. But, these opportunities coming and going very quickly this year.
Hannah and Justina, thanks so much. Bloomberg's Justina Lee and Hannah Gooch-Peters, Sanlam Investment Global Equity Investment Analyst. Now, coming up, oil studies after OPEC Plus delays the revival of shuttered production. We take a look at market sentiment next, and this is Bloomberg. Well, oil steadied after OPEC Plus decided to push back the revival of shuttered production by another 3 months. Now, the decision actually failed to lift sentiment in the markets that expected to suffer from a glut next year. Let's bring in Bloomberg's Jumana Bersace in Dubai. Hi, Jumana. So what were the key takeaways from the OPEC meeting?
Yeah, well, Francine, this is the third time OPEC Plus have decided to delay their decision to start putting back those extra barrels to the market. And look, I mean, this is a reflection of market dynamics here and how much the price of oil has moved just since they came out with that initial announcement back in June that they were going to start gradually returning 2.2 million barrels per day over the course of 12 months. Since then, the oil price has dropped 18%. So a lot of headwinds facing the energy industry here, which prompted their latest decision to actually postpone it once again towards April of next year and then gradually start putting back those oil barrels, not over the course of 12 months, but actually over the course of 18 months. So even more gradual. But I would say, Francine, the lack of reaction today in the oil market is pretty telling itself, because this market is still reflective of the fact that looking ahead into next year, you are looking at a supply glut, and that there's a mismatch between the amount of barrels that are anticipated to hit in terms of supply growth versus the forecast for demand growth. And herein lies the issue, which means invariably what OPEC are doing is they're just kicking the can down the road. But at some point, they will have to make difficult decisions in terms of how much market share do they want to lose versus maintaining price stability.
So what is, Jumana, the outlook for oil prices next year?
Well, it's interesting that you say that, Francine, because actually several analysts out there, including the likes of Morgan Stanley, have marginally put up their revisions, put up their forecast for oil prices going into next year. They see prices averaging around $70 because of these adjustments that OPEC Plus have come to. They now see a mismatch or a supply glut of around 500,000 barrels per day. Before that, it was 800,000 barrels per day. So yes, there's small technical adjustments being made, but the big swing factor going into next year is going to be what happens to China demand. The demand signals coming from China have been weak. That has been the reason why OPEC and IEA, both of these groups, have revised down their outlook for demand growth going into next year. Add to that, you've got the possible return of the Trump administration. We know that he's very much focused on energy dominance, so all of those are factors contributing.
Jumana, thanks so much. Jumana Bersace there with the very latest on oil. Coming up, more from our exclusive interview with Marine Le Pen, the leader of the National Rally, on why she believes France could pass a budget within weeks after the government's collapse. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. These are your top stories. More turmoil in South Korea. President Yoon's planned trip to the National Assembly is cancelled as he loses a key ally ahead of an impeachment vote for treason. Emmanuel Macron vows to serve out his term as French president, promising a new prime minister within days. Meanwhile, National Rally leader Marine Le Pen tells us a budget will pass if the government narrows the deficit more slowly. Plus, a bullish day for Chinese shares. Investors await U.S. jobs data due out later today. So back to our top stories, and South Korea's president Yoon Suk-yeol has cancelled a visit to parliament where he faces impeachment proceedings for a failed attempt to impose martial law. Now, there were reports that opposition lawmakers were planning to block Yoon from entering the building. For more on the story, let's bring in Bloomberg's Katya Dmitrieva. Katya, the scenes seem to be pretty chaotic right now. What do we know?
Yeah, the past few hours, well, really the past 48 hours have been incredibly chaotic in South Korea. And we know that things have changed even just today. You know, we had originally thought that impeaching the president would be done by Saturday evening. That was sort of the latest by law that they can have this vote. You know, unfortunately for the main opposition, the Democratic Party, what's happened instead is that the leader of Yoon's party said actually they'd be voting against any kind of motion. And then, of course, this morning, the latest is that the leader of Yoon's party said, in fact, new information had come to light and they would be looking to relieve Yoon of his duty. They didn't use the word impeach, but he did say that Yoon should be relieved of his duties, and that's because there was evidence, allegedly, that Yoon had called for the arrest of several members of government, which is against the law. And so that's sort of where we stand at the moment as we're seeing these scenes unfold.
I mean, Katya, to ask very bluntly, is this a president gone rogue, or are there competing forces politically?
That is such a good question, and I think a lot of people are trying to answer this exact question right now. And depending on the answer, if you're a policymaker in South Korea, depending on the answer, it will decide the fate of President Yoon and who might be president of the country. We know that by Saturday there might be this vote to impeach the president. After that point, we'll see if they can get 8 members of his party to join that vote, because there is criticism of President Yoon, of course, not just from the public, from all these protests you're seeing, but also from analysts and from the opposition and members of his own party saying this was very clearly an attempt of the president to maintain power when his favorability ratings are now at a record low and when he's being called on to be investigated by a number of people in the opposition. So that's definitely one side. Yoon's side, of course, is that he was trying to quash anti-South Korean or pro-North Korea elements in the government. So depending on where you sit on that debate will really decide how you vote, how policymakers vote as soon as Saturday.
It certainly will, Katya. Thank you so much for all of the great reporting there on the ground, Katya Dmitrieva. Now, a measure of risk in French bonds actually fell on the possibility that lawmakers will strike a deal on next year's budget sooner than expected. Far-right leader Marine Le Pen told us in an exclusive interview that a budget can be passed in a matter of weeks if the next prime minister is willing to narrow the deficit more slowly.
Getting to 3% in 2029, I don't think it's credible. But I'm not the only one. I don't think it's credible either to the president of the Cour des Comptes state auditor. Once again, these are simply promises, and they know very well that they can't keep to them. Mr. Barnier made that promise, and in reality, his budget worsened the deficit by 12 billion. So if we don't make significant, intelligent, structural savings with regard to the state, and if we don't put in place the conditions so that companies can work, invest without being suffocated with extra taxes, we won't get there. But with those two solutions, we can succeed as quickly as possible to get back to a reasonable deficit, even if the 3% was just decided on the back of an envelope.
How fast could that be?
Well, it's a matter of weeks. We'll discuss it with the new Prime Minister. We'll work together. We'll explain what our red lines are. Our red lines are we can't ask the French people to pay the bill for the mistakes of their leaders. That's what Mr. Barnier did. He massively increases taxation, he hits sick people, retired people, he hits everyone. And at the same time, once again, there's zero savings from the state, and that's inadmissible. Well, in any case, what I said, that the president's resignation is a personal decision on his behalf and can only take place, in my view, when a political crisis takes place or an institutional crisis can find no other solution than the resignation of the President of the Republic. It is not the case for the moment. What I do wish, on the other hand, because for sure there will be new legislative elections in the next few months, is that we work on a voting system by then that enables us to have a real majority, whatever that majority may be. But the country needs a majority. It can't live for months and years with 3 blocs, which in reality can't implement a policy.
Well, I also asked Marine Le Pen again why she will not ask President Macron to leave before his term ends in 2027 if she worries about severe market reactions in the short and medium term.
To ask him to resign would mean to disturb our institutions. Once again, it's his decision. Now, if there is a political crisis, an institutional crisis, and if he can no longer dissolve the assembly, if reshuffle serves no purpose, then the French constitution only leaves one other option, which is his resignation. But that wouldn't be a drama either. There would be new presidential elections. General de Gaulle, you know, designed our institutions, and they are very solid. They are extremely solid. Everything's done to make sure that the life of the nation can carry on and not create disturbances that can't be dealt with. If he were to resign now, there would be new presidential elections and new legislative elections.
But are you worried about these crises then leading to severe market reactions?
No, because the reality is that what worries the markets is the economic situation in France. What worries the markets is the lack of perspective concerning reducing deficits. It's the absence of savings at the state level, the increase of taxation on companies that worries the markets. And in fact, you've seen the markets have remained extremely stable over the past few days since the announcement of the no-confidence vote, and even after the no-confidence vote. In reality, they had concerns at the moment of the dissolution in June. But for the moment, whether it's the spread between France and Germany, the rates, or the markets, but for the moment, whether it's the spread between France and Germany, the rates, or the markets, for the moment, everything is relatively calm. Because once again, they realize that anyway, there has to be at all cost another policy other than that envisaged by Mr. Barnier.
But the market is probably looking at the fact that the ECB is standing close and that there's a want from France of getting the deficit down pretty quickly.
Well, yes, but once again, there's a long way to go between wishes and reality. Mr. Barnier wanted to reduce the deficits. He's increased them by 12 billion. You see what I mean? So, once again, using a hammer to bash French people over the heads with taxes, when we're the country with the highest rate of taxation in Europe, is not the solution. But it's the only solution that French leaders have implemented for years. It doesn't work. Look at the situation we find ourselves in. So help companies, enable them to do business, reduce production tax, reduce the cost of energy, or at least reduce it to the same level as the cost of production in France. Those are things that will allow companies to develop and thus create employment.
Voilà, ça, ce sont des lignes qui vont permettre aux entreprises de se développer et donc de créer de l'emploi.
But Madame Le Pen, I mean, first of all, the Barnier actually proposal means that GDP would be the deficit of GDP would be 5% in 2025 compared to 6% this year. So it's going down.
Non, il augmentait de 12 milliards le déficit.
No, the deficit rose by 12 billion. The deficit rose by 12 billion. But you know, the head of Safran, which is a major company, has just given an interview. And what did the head of Safran say? He said Barnier's budget is a bad budget. So, in reality, the fact that it's last year's budget that's applied, however unfair it was socially, is actually rather good news for companies. There are a certain number of entrepreneurs in economic circles who are in fact pleased about the no-confidence motion because they consider Mr. Barnier's budget was worse than last year's budget, and that's saying something.
Well, I also spoke with Marine Le Pen about the reopening of Notre Dame Cathedral and Donald Trump's visit to Paris on Saturday.
Well, I won't meet with him, but maybe we'll bump into each other because I will indeed be there too, at the reopening of Notre Dame, which is a major event for us in France. I don't have any relationship with Donald Trump. I will have one, I hope, the day I become president of the Republic.
Well, Trump's visit to Paris marks his first trip overseas since the November election win and makes Macron the third foreign leader to meet with him since his victory. For more, Bloomberg's Kevin Whitelaw joins us from Brussels. Kevin, I mean, there's a lot going on. And then, of course, Donald Trump shows up in Paris tomorrow. How will Europe approach his visit?
Well, I mean, obviously, Europe is going to be looking for any clues they can find on what he's going to do on two big issues in his first couple days and weeks in office. And those are U.S. support for Ukraine and then, you know, what his plans are with regards to tariffs that he's threatened to impose on Europe. So, you know, if you're Macron or if you're a number of other European leaders, you're looking to find ways to reach out to him, to try to show him that Europe's engaged and ready to listen and work with him and try to avoid some of the things they fear most. If you're, you know, whether it's a few other leaders who are maybe more Trump allies, depending on who shows up, they may be trying to get his ear on a different set of things. So a lot at stake as they try to set the tone for what will be the first days of his administration next year.
So, Kevin, how is Emmanuel Macron going to deal with these two competing forces? So he needs to form a government, find a prime minister. He's under increasing pressure from voters in France. But he also had a special relationship with Donald Trump the first time around. So he still wants to wow and impress him.
Yes, and I do think he's got, at least with this moment in Notre Dame, it is a moment to, on some level, you know, show him some pomp and ceremony of the kind of thing that Trump does enjoy. He's previously enjoyed some of the French pomp and circumstance with military parades and other things. But Donald Trump is a guy who responds to strength. This is probably the weakest Macron has ever been, with the collapse of his government and also about to have the EU clinch a trade deal with the Mercosur group in South America over his vehement objections. So on one level, he's got the trappings of all of the elegance and the grandeur of Notre Dame at a time where he just couldn't be more vulnerable. So it's going to be interesting to see whether Trump responds to the pomp or sees through some and focuses on the weakness.
Kevin, Trump's picks David Sachs as White House AI and crypto czar, David Perdue as ambassador to China. What's your take?
Yeah, you know, these are both interesting picks because after picking a number of harder line, you know, people to fill key foreign policy and security positions, harder line on China. You know, picking David Perdue is a little bit of a middle ground pick, a businessman who's worked in Asia and has talked about you know, the various reasons to want to, you know, continue to trade there. So I think on some level, I think, you know, China can look at that as maybe, you know, picking more of a businessman, the kind of person that can be talked to and that there's room to make deals with. On AI and crypto, you know, David Sachs is a guy who is not a hardcore crypto guy. Trump has come in as a very strong booster of crypto, but you know, I think what you're actually looking at in this situation is someone who may help lead a bit of a charge to put a legal framework around crypto, maybe a pro-crypto framework, but a legal framework, a regulatory one nonetheless. So that would likely be his job. At the same time, it's an advisory role. It's not, you know, sort of a full-time member of the administration. So we'll have to see exactly what that means about his influence in the White House down the line.
Kevin, thank you so much. Kevin Whitelaw there in Brussels. Now, coming up, two of Britain's largest insurers are set to merge as Direct Line has accepted a £3.6 billion takeover from Aviva. More on that next. And this is Bloomberg. Welcome back, everyone. Now, Aviva has reached a preliminary agreement to acquire Direct Line as a UK motor insurer finally succumbs after fending off takeover interest since early this year. Now, the London-listed Aviva sweetened its bid to 275 pence per share. The cash and stock proposal valued Direct Line at £3.6 billion. Let's speak with Bloomberg's Aaron Kirchfeld, who, of course, runs the M&A team for us here. So you're always busy. You're always chasing deals, Aaron. I mean, why did they say yes finally?
Well, finally, after a lot of back and forth in terms of price, I think they got to the magic number, which was kind of 270 plus. They'd gone in initially at 250, then they bumped a couple days later to 261. And I think they were closing the bid-ask gap over time. And I think at the end of the day, Amanda Blank, the CEO of Aviva, really wanted this deal. She's gotten some credibility from her investors after reshaping the company. So I think she knew she could get the backing, even if she stretched the price, to win over Direct Line and their board.
So what does this give her? I guess it's more online, kind of consumer-friendly?
Yes, more consumer. I think in particular it gives her motor insurance. So this makes them, according to our analysis, the biggest motor insurer in the UK. Aviva is very life-dependent, so this diversifies their revenue stream. And it also gets them a company that's been struggling a bit. Direct Line has been working on a turnaround, cutting some jobs. They missed the boat on comparison websites, et cetera. So I think she sees this as an opportunity to take a company that has a lot of potential, get it while it's turning around, and then get synergies, get growth, and diversify her portfolio.
I mean, Direct Line, I always think of the ads. I don't know whether that's a good or bad thing.
Yes, the ads and the jingle that you can never get out of your head.
Yeah,
absolutely right.
Thanks for that, Aaron. In terms of M&A, so we're 6 months into a Labour government. We haven't had a Labour government for the last 13 years in the country. Has it made difference to the animal spirits and whether, companies want or need to buy each other?
Yeah, so I think there was some nervousness about when Labour was taking over, especially with the budget. Would that crimp M&A appetite in the UK? What we've seen so far is actually quite the different version. We've seen a lot of activity. The UK is way up, 80% plus year to date in terms of M&A, double the next, European country in Germany. And with deals like this, like Direct Line, it's just more evidence that there is still appetite to do deals. And let's not forget, UK companies remain relatively cheap compared to their global peers. And what's an interesting trend on the flip side, as my colleague Ben Sent reported, is that we're seeing the most delistings of UK PLCs due to M&A in over a decade, which, on the one hand, you want to see M&A activity. On the other hand, you ask yourself, how much longer will there be enough UK companies, for equity investors, et cetera, in the country?
So interesting. Aaron, thank you so much. Aaron Kirchfeld there, who, of course, leads our deals team. If you have a tip, you can email directly Aaron and his team. Coming up, our interview with the Queen Maxima of the Netherlands on her role as UN ambassador for financial health. That's next, and this is Bloomberg. Now, in her role as the UN Secretary General Special Advocate for Financial Health, Queen Maxima of the Netherlands has championed the development of financial services and policies to support ordinary people around the world. Well, she spoke to us about the importance of financial literacy and inclusion.
What we've actually realized is having access to financial service doesn't mean in and by itself that you become better at it. In the Netherlands, we have 99.7% of financial inclusion, and we do have 23% of the population that are struggling to making ends meet, struggling to save, struggling to manage their finances. In Kenya, for example, we've seen a very big jump of financial inclusion, but we also saw a lot of consumption credit by which a lot of households end up being over-indebted. So this issue of looking at the financial health, at the outcome, so it's financial inclusion for what, is extremely important. And as I think it's important to define financial health. What is financial health? It's not about, how much income a person gets, but it's actually how do we help clients and citizens in managing four things. First of all, how do we help them manage the day-to-day finances? Make it to the end of the month, you get a lot of money 1 week, and then, you don't get anything for some time, and they get a lot of bills. How do we help them bridge and budget, their monthly or the weekly, or even sometimes in India, daily? Number two, how do we help them to go for those long-term, goals they actually have? Buy a house, a mortgage, pension, being able to invest in your children's education, these long-term goals that, you can actually identify yourself with. The third one is the resilience part. How do we help people go into these, help themselves out of these shocks, health shock, job loss, climate change shocks, Even small shocks, your car breaks down, and this is the one that you actually use to go to your job. Do you have that money to actually go to the garage and pay? And the fourth one is the confidence you actually have to be able to manage that.
I mean, this partly is financial literacy. This is, of course, managing money. Are women disproportionately affected, or does it affect all places in society, depending on what country you're in?
Well, I think it affects in different places because the contexts are different. For example, in a country like Kenya, school fees are a big worry for families. So that would be the reason why people get indebted, or they try to get a credit. Whilst in Tanzania, it would actually be a health shock because the health system is not that well organized. So per country would be different. For example, here in the UK, 1 in 4 people in the UK cannot come up with £300 in case of an emergency. So this issue of actually having some emergency buffer, it's a very, very important issue.
Well, that was Queen Maxima of the Netherlands on the importance of financial health and inclusion. Now, in a few minutes, we'll be speaking with the German finance minister, Jörg Kukies. Don't miss, of course, that conversation that has to do with trade ahead of the election in Germany. It'll be extremely interesting to see how he sees the political development going, and actually maybe some of the solutions that he sees for Germany needing. At 10:40 a.m. then UK time, we'll speak exclusively with the Bank of England external member, Swati Dhingra. Lizzie Burden will be doing that interview. A programming note also on Tuesday. From Tuesday, Bloomberg TV will have live coverage of Woman Power and Money event, convening the most influential female voices in finance from around the world to discuss consequential themes facing the futures of business. I'll be speaking to Jenny Johnson of Frankel Templeton. I'll also be speaking to Laila Ibrahim of DeepMind and Anna Butin of Santander. Coming up, all focus on U.S. job. You can see S&P futures practically unchanged. Up next, Bloomberg Brief. This is Bloomberg.